Well, I have the pleasure today to interview Duncan Cooper from ACY Securities. Duncan, your first time on the program. It's fantastic to have your company. Let's crack on because we've got plenty to get through. And I think at the end of last week, of course, everything was about the US dollar and that hot inflation print. We're going to take a look at the dollar index to start with. Here's the monthly. What are you seeing right now?
Hi, Cal. Thanks for having me on your show. Well, at the moment, we're obviously having a very strong month up after, I think, a 4-month decline. And what I'm seeing on the monthly chart is that whilst we have been back below the 103.82 double top area there, we've moved back above it. So strength has definitely been coming back into the dollar this month. After, at the start of the month we had very good job figures, and the dollar's just been very good all month. So it looks like we've got 2 more trading days to go. We're going to close back above that key area of support or resistance, which looks to be, support at the moment, long term.
That's interesting. We'll move to the daily chart as well because we'll expand a little bit on the implications of this. I think, is this to say effectively that, maybe we're going to see something of a reversion in the US dollar? Of course, from a macro point of view, a lot of the conversation now is about a more aggressive US Federal Reserve. Is the technicals almost aligning with that narrative?
It would seem so. Obviously, we had the FOMC meeting minutes come out, last week, and from memory, we're expecting maybe, 3 more rises. And technically, looking at the day chart now, we have higher tops and bottoms. And notably, about a week ago, we moved above the 103.82 support or resistance level there, and formed a little bit of a higher bottom there, and we finished very positive last week. And the arrows that are put on the chart there, the next major level of resistance is a weekly top at 105.69. So that's going to be the next key level for traders to watch. Do we approach that level and hold and have a bit of a pullback? Or do we simply break above there, form another higher bottom for a move higher? One of the levels I've drawn on the chart there, where that little orange mark is, we had a bit of an imbalance on the way down where price didn't fill. So the market may well be targeting that area, and if so, we've got quite a long way to go at the moment in terms of a further move up. And I guess the big question is the low that we're seeing in February, is it the yearly low, or is it just an interim low? Are we going to see a longer term move back up to test the high of last year?
And that's, of course, the big question when it comes to the US dollar, and a very key level we'll have to keep an eye on this week because there's every chance we might test it. But of course, let's get to another currency pair, or a currency pair in particular. And it's a natural segue from the US dollar index because of its very large role it plays in the index itself, and that's the Euro USD. It's its biggest driver, if you will. What are you seeing on the Euro USD there? Is it a signal perhaps that it could be dollar positive, maybe some weakness in the euro to come?
Well, that's my forecast at the moment. I've got a fib drawn across a range there, which is actually last year's trading range. So we've been pulling back up over the last 4 months within the range of last year. And I've got a few lows obviously drawn in there. The 106.35 long-term monthly low there, we've moved above it, but now we've moved back below it. So what I'm anticipating is that this very negative month, we may have an outside reversal month by the end of the month, is that we're going to close maybe back below now 106.35, and then the next target for the move down would be the next significant low at 103.40. So I'm anticipating at the moment, from my perspective, that we could be putting in the yearly high, and we could be moving down for the rest of the year. We'll just have to wait and see what the rest of the year brings.
Absolutely. Well, let's get a more granular look at that now because we will go to a daily chart on the Euro USD. And you've outlined here a fairly key level that we'll have to keep an eye out for, somewhere around 106, it would seem. Yeah,
106. So, last week we were kind of holding just above 106. There was a daily level of support there at 106.12. And we moved through there Thursday, Friday. And we're a little bit overextended, so we may see the opportunity of a rally at the start of the week. May come back up to the 10600 level, retest that 106.12 level of resistance now, and through the course of the week I'm anticipating that we could start to move down and test what is weekly support at 104.81. So clear downtrend there on the daily chart. It's just a question of, if you're not, already short, where could you get a nice shorting opportunity? And 106.12, round about that area, we may see a rally and an opportunity for traders to take the next sell.
And that's going to be absolutely influential, not just for currency markets, but also broader financial markets. But of course, we'll stick to the currency equation at the moment because we'll bring it home to some extent and talk about the Aussie-US pair. Here we have the weekly chart before us. Discuss what you're seeing here, because it would seem that, well, maybe we've seen something of a double top and a continuation, or we're poised to see the continuation of this downtrend.
Yeah, it's interesting, isn't it? So here on the weekly chart, we've moved up to the 71.37 weekly resistance level. And again, I've got a fib drawn in. Again, this is the range of the year for last year. So we've pulled back up with inside that range. There's a 62% level there as well, just below the 71.37 level. And yes, are we forming a double top? If my memory serves me, Wednesday this week, we've got the CPI data coming out. So the market will surely be looking at that figure. And the question in my mind is that a significant top forming there now? Is a double top forming? Are we going to see a move down to test last year's low over time? So at the moment on the weekly chart there, the next significant level of support is at 66.29. So I think the market's definitely eyeing up that level. Then it's going to be a question of, can we move below that level?
Most certainly. And just in the interest of time, I just wanted to move on from the Aussie very quickly, because I wanted to talk to you about the pounds, one that hasn't been brought to our attention on the show actually for a little while. So I'm really interested to get your views. We've got the daily chart here just to start with. Can you discuss with us potentially what you're seeing? Because it would appear, again, another one that's about to perhaps succumb to some US dollar strength, perhaps technically looking vulnerable to further downside.
Yeah, so technically you can see there, again, not too dissimilar to the Aussie. Are we forming a double top? And, technically if we break the low at 118.41, so weekly support, then that double top is going to come into play. And if we just look further down the chart, the way I teach the double top pattern is if we break the low of the midpoint of the two highs, we can move down the height of the pattern. So the height of the pattern projected below is at 112.35. So there's still a question at the moment that we could stay in a range. We could get down to 118.41 and then hold. Support could hold and we could just move back up the range. But if we get a clear break below 118.41, then the question is, if we break below 118.41, does that become resistance and offer an opportunity to trade down on a retest for the longer move down?
Well, let's look at the weekly chart now just to get that longer term view. And for the fact that we have bounced off in what was very much an extraordinary fashion last year when we did see the lows for the pound, a long way off of that point, but still looking technically, or at least structurally, in a downtrend, potentially in the longer term, something of a continuation if we break through that 118 level or thereabouts.
Sure, yeah. Again, I've drawn a fib here across last year's trading range, so I like to monitor what the position of the market is within last year's trading. And we're forming potentially there a double top at the 62% retracement level. So double topping at 124.47. And yes, are we seeing a long-term continuation down? I mean, last year we would have never thought we would get down to the 103 level. So the question would be, would we get down to the 103 level this year? So 118.41, I'm sure that's going to be watched very closely by the market. Can we move down below that level? If we can, it does open up the question, are we going to see a long-term continuation? Is the US dollar, putting in its yearly low this month? And are we going to see continued US dollar strength this year?
It's going to be such a crucial question to answer for market participants. As the old saying goes, when you do try and form a macro view, you do start with the US dollar and work outwards. So a very, very fascinating setup, especially after Friday's market action. But Duncan, that's all we've got time for on the trade today. I really appreciate you coming on. Looking forward to our next conversation and all the conversations to come. Duncan Cooper there from ACY Securities.
Thanks, Cal.